Hi everyone, it's Athena here again, and today we're gonna go in depth into one of the financial statements, which is the balance sheet. Before we begin, if you need any accounting help or accounting support, feel free to head over to pearlemonaccountants.com. Let's begin. So we previously defined what a balance sheet is. It's a statement of the assets, liabilities, and capital of a business or other organization at a particular point in time. So this is an example of a balance sheet. An important concept to note in a balance sheet is it's also called the statement of financial position. To further illustrate the meaning of this, for example, here's a timeline. And this is the year 2020, 2021, 2022, 2023. And for each year, a statement of financial position is usually made at the end of the period, which is right here, which is, let's say, December 31, 2020, December 32, 2021, and so on. And it's called the statement of financial position because the position at this point, it shows the balances of the assets, the liabilities, and equities at this specific point in time, which is also true for this point, and this point, and this point. So let's go deep and define each line item in a financial asset. In the balance sheet. So the first part, at the top part, is the asset. So what does asset mean? Assets are ownerships of the company. And as you can see here, one of the very first line is current asset. So it's divided into two, current assets and non-current assets. So current assets are in a period of one operating cycle. Or year, or 1 year. And this one is short term. Meanwhile, non-current assets are for long term. So an example of current assets, short-term current assets, are cash and cash equivalents, and it's very self-explanatory. It's the current cash that the company owns, cash or money. It can be cash which are located in the bank. Another example are marketable securities. Another example is accounts receivable. Accounts receivable are basically accounts yet to be paid by the customers, so it's under an asset because in the future the company will be receiving cash in exchange for it. Another is inventories, and another are other non-trade receivables and other current assets. So these items here, as you can see here they are totaled here. And an example of non-current assets can also be marketable securities, but the difference from this one is that it's longer term, so more than 1 year or more than one operating cycle. And of course, property, plant, and equipment, one of the most common non-current assets, can also be land, it's not mentioned here, but one of the also the common non-current assets. And also it's totaled, and the non-current assets and current assets are totaled to get the total assets overall. So going back again, with balance sheets being the statement of financial position and describes the position or the balances of the accounts at a specific point in time, meaning as of September 26, 2020, which is their end of operating cycle. At that point in time, their balances are this, and etc. So that's the asset part of the balance sheet. Again, if you need any accounting support, feel free to head over to perlamanaccountants.com and we'll get in touch with you. Thanks for watching.